For more on the markets, let's bring in Financial Times U.S. Managing Editor Gillian Tett, Raymond James Chief Financial Strategist Jeff Sott, American Wealth Management President Laif Maydell, and Ira Epstein of the Lynn Group. Thanks to all of you for joining us. Gillian, let me start with you. Another wild day in the markets, huh?
Volatility is certainly the new big theme of the moment.
Yeah, absolutely. Jeff, what do you make of that? And how long do you think that this will continue? Is it all a reaction to what may or may not happen with the Fed?
Yeah, I think that has a lot to do with it. The news over the weekend was obviously constructive. We told accounts that you'd probably get a move like you saw on August 26th and 27th coming out of that compression over so low. It looks to me like you're going to get a peekaboo above 2,000, and then I think we're going to come back down and test the lows again.
Ira, what do you think of that news out of the World Bank? We got it just at the end of the last hour. Liz Clayman gave it to us. The World Bank piling on with the IMF, telling the Fed not to raise rates.
Well, you know, we came out of the G20 with China saying their economy's iffy. They're going to do whatever they can to shore it up. And what they're all asking for, the IMF, the World Bank, is let them do their job. You don't have to throw higher rates out in front of everybody right now. And that's what you're seeing. But remember, you rally now, you get to September 17th, you get a different world, and the seasonals in September and stock indices are up at the beginning here, and after the 20th, a bit down. Remember October, rarely a great month either.
But, Laif, I mean, there's always a reason not to raise rates. No matter what time it is, there's, oh, don't throw that out in front of us right now. Meanwhile, we've been sitting at this emergency stance now for years.
So what?
Yeah, I understand the argument for not...
Stay here longer.
Go ahead.
Hang on. Go ahead, Laif.
I understand the argument for wanting to raise rates now, and I understand the argument for not wanting to raise them. I don't think the Fed can really afford to raise them yet. Certainly December is clearly a lot more in the cards. But, you know, we've got some earnings coming out here in October, and I think that there's some concern about these earnings. So having high rates just before an earnings season, I think is going to be problematic, and I think that the IMF, the Fed needs to listen to them. They've been sending the same message. This isn't the first time we've heard this.
Gillian, Ira says, so what? Who cares? Why should we do it right now? I'll give you a couple different reasons. I mean, number one is we're setting an emergency stance. What if there is actually an emergency? I mean, there's nowhere for the Fed to go from here. What can they possibly do? Another reason is, you know, we're making the wealth gap so much bigger. You put so much free money out there. You had Warren Buffett in the last hour saying he's going to borrow money to do deals. Why not? It's there and it's free.
And here's another reason, frankly, because the Fed's been telling us for a long time it's data dependent. That is its official mantra. Well, here are the two key pieces of data it's supposed to watch. Unemployment, that has now fallen significantly. It's actually where the Fed said it should be when it began to raise rates. Inflation numbers, those are actually lower right now than they were at the beginning of the QE.
Yeah.
So in terms of the actual macroeconomic data, if you're looking at the United States, there is no reason not to act. Of course, the reason why the World Bank and others are so concerned is actually nothing to do with America. It's to do with the rest of the world, and in particular, the emerging markets like Brazil, India, and China above all. That's what people are really concerned about right now.
Yeah, Jeff, I mean, and then there's also the question of the reason why the World Bank and the IMF are weighing in. I mean, it's only going to make the dollar stronger, right, from here? I mean, if you raise rates, that's where you go. Jeff, are you with us?
There's two ways to look at the dollar.
Yeah,
I'm with you.
Okay, go ahead.
You can look at the dollar on a... You can look at the dollar on a trade-weighted basis, and the dollar's pretty strong. But if you look at the dollar index, it peaked in March and April of this year and has not made a higher high. So I think the Fed could raise rates. I don't think the Fed will raise rates.
Ira, go ahead.
Yeah, I agree with that. In fact, he hit it right on the head. Look at the euro. You're not at 104. You're pushing 112, 113 there. And what is this big thing so we don't raise rates now? The CME has a Fed Watch page. Why don't people look at it? You see the September probability under 20% most of the day. You're seeing October about 40, and you're seeing December in the mid-50s. The market is, and this is where the smart money is saying no. The Fed doesn't have to do anything and most likely won't do anything.
But, Laif, of course the market is saying no because they don't want it. So they're going to say no as loud as they possibly can. I mean, isn't that what a lot of the hissy fit in the markets has been about?
I don't know.
Yeah,
I don't
but
really quite agree with that. I think that sentiment is changing. I think people are saying, please raise this because we need to kind of load up some ammunition for when things get bad. We're going to roll into an election year. Things could get a little rocky. Wouldn't it be great to be able to lower interest rates out in the future somewhere if we need them? So I do understand that, but I think that there's a sentiment change, although I don't think it's an accurate one. I think maybe we may be just kind of throwing out we may be a little bit early to that party.
Okay, we got to leave it there, guys. Thanks to all of you. Appreciate it. Good discussion. David.
Proof that rates are too low, as you said, Melissa.